point. Looking for a long term, looking for 6 months holding, 3 months holding, prefer the stock which is not lying under FNO. Logic is every day Nifty related stocks, FNO stocks will keep going up and down. So which cannot fetch you that much returns. But if you are going with stock which is not under FNO, it will clearly give a good move. If it is falling also, recover, giving breakouts, going for a rally. So this is how it will perform. But if it is an FNO, every alternative day, as I told you, it will give its momentum, which is not going to be favorable for a short term, for a long term investor, or maybe if I want to make it like 3 months, 6 months holding means it is not going to favor you. Maybe 50%, 20% you may be getting from it. Taking non-FNO, even more than that also possibilities are there. Okay, so this is a small trick. Try using it. You will come to know the difference. Okay, so index, as I told you, for creating an index, one has to intraday or for delivery. Trading is mainly for, index is mainly for intraday, and for BTST also every day I have to check. So today I'm checking index means it's for today's trading. If I want to check it positionally, then you can go with the daily time frame. Okay, technically let's not speak here, Mr. Mahesh, but for you, as you are already our trainee, I'm giving you this point. Going with daily chart, you can refer for tomorrow or day after tomorrow's analysis, but for every day's analysis, you have to go with a lower time frame. Okay, and for creating an index, one has to group some stocks from the list of stocks with similar characteristics. This grouping of stocks can be on the type of industry, total market capitalization, or size of the company. That is grouping the stocks. Some of the standard indices in India: NSE, Nifty, BSE, Sensex, Nifty Next 50, etc. Sectoral index, just now I gave you that update, like Nifty FMCG index, Nifty Bank, Nifty IT, Auto, etc. So I gave you that point. In case if you are looking for sector-wise stock selection, please prefer that. It's really helpful for selecting in sector-wise. Even technically also, that specific index will be helpful for you to analyze. And Nifty 50, National Stock Exchange and 50. The Nifty 50 is a benchmark Indian stock market index that represents the weighted average of 50. So Nifty 50 stocks will be coming under the list of the largest Indian companies listed on the NSE. It's a weightage index for the Indian stock market that tracks behavior of a portfolio of 50 companies listed on National Stock Exchange of India, which is NSE. 50 companies covers almost major sector. We have seen, right, all sectors available. So major sectors are covered in the 50 stocks, and it acts as health card of the nation. The Nifty 50 index has shaped up to the largest single financial product in India. Yes, of course. The Nifty 50 index covers 13 sectors of the Indian economy and offers investment managers exposure to the Indian market in just one portfolio. Checking Nifty 50, I can easily understand what's happening generally here in the Indian market. Okay, so that much effective Nifty 50 is, because it has that 50 stocks with major sectors. Okay, so few points just for our change to go to the further process. Nifty is master for major sector. As you know, it's the master. How Nifty moves the same direction, stock may move. Why this red color and why may move? Because all the students are not like top rankers, right? Obviously, like weak students are there, and backbenchers who will never follow the rules are there. So like that, even out of 50 stocks, if 48 stocks are going in a direction, 2 stocks will go in opposite direction. This is very natural, and also like it happens everywhere, right? So in that case, preferring a stock with respect to the direction of Nifty is always safe. Okay, so if in case technicals are perfect, it is giving a short, but market is green, but technicals are perfect, right? Why I should not make an entry with this shorting? You might have made good returns also out of it, but remember that it's a fluke thing. You will not be getting that consistently. Following Nifty and its trend will make your trades consistent enough. Direction, important factor. Market is nothing but Nifty and the indices according to your sector also you can prefer. Okay, stock, share, script. So you can take any name. That is like as I told you yesterday also, terminologies may differ, but with the same meaning, right? So the same way, stock, share, script. However you want to do, you can name it accordingly. DLF, Reliance, ICICI Bank, these are the shares. With respect to commodity, as we learned yesterday, like gold, silver, crude, nickel, these things and all there. But in equity market, the companies. Prediction, yes. Let's make a small change in our way of speaking also, so that we will get used. Surely there will be a big change in our trading career. So just a small change. Don't ever use a word called prediction, because we are not going to do any gambling here. We are not going to do anything on a luck basis. We are analyzing with the technicals. We have learned it, and professionally we are going to make our tradings. So let's make a change. Let's start using the word analysis or research instead of prediction. I predicted that, never use it. I analyzed that, I have done a research on this. Okay, let's do a change, okay, in this and act upon the momentum accordingly. Okay, so sector of Nifty, all these sectors available, like financial services, IT, oil and gas. I'll give you the updated one, okay. I have an updated sheet. I didn't make the change here, but I have it separately. The weightage of the financial sector, 37, always it stands on top. This is actually the updated version of 2024. And information technology stands to the next, oil, gas and consumable fuels the next. So why we are referring to the weightage? Why weightage is that much important? You know, right? Actually, balance should not miss anywhere. Let it be life, let it be market, let it be your personal or professional things. Always that balance should be there, right? Not so down, not so high. Both are dangerous, right? So it should be always on a balance. The same way, in case if the highest one, for an example, I'm keeping many balls. Okay, I used to give the same example every time, but I think it's very easy to understand. So I have kept a box, okay, box where I have already arranged many balls with different weights. Okay, I have arranged many balls and I have everything perfect. Like checking with the weight, I have added the balls like with 0.35 also I have added a ball, and the perfect balancing came to it. Okay, after adding all the balls perfectly with the percentage, I have kept my weighing machine balanced. It's perfectly balanced because I have added with that proportion. And now I'm taking a small one out, 0.35 ball out. Okay, balance may miss because I have perfectly arranged everything. So it may miss, but not to that extent. Maybe a small up and down balancing issue will be there, but not that extent. I'm taking like 37 percentage ball out of my box. Total system is collapsed because the majority, the percentage, high percentage that ball was actually having, but I have removed the ball out of the box. Maximum my balance will get missed, right? It will be missed out. The box will be maybe falling down, or the balance will be too much, like it may be coming up or down. Something will happen to the box. This is what simply the weightage, the logic behind the weightage. In case if something happens to the highest weightage sector or highest weightage stock, then that will reflect in our market. So in case if something is happening to the least one, market may slip, maybe somewhat fall maybe happen to 0.5 percentage, 0.3 percentage, but not to that extent. That fall will not be to that extent, or maybe consolidated move will be there. Market is ready for a fall, but something happened to the least weighted stock, so somewhat consolidation will be there, and again market is going to continue its way. But highest weighted sector is giving me a fall. Some negative news I got, some positive news I got. Suddenly the sector is falling badly or giving a rally like anything. That will affect our Nifty's momentum. That is the reason it's always good and important to refer weightage stocks also, which is on the high, and any news if you are hearing any news about HDFC, always be careful because HDFC stands on the top 13.26 percentage the HDFC holds, right? So if any news is there on HDFC and it is badly crashing, badly giving a rally, which is always going to affect my market, so I'll be very careful knowing that news also. Okay, in case of Reliance Industries and HDFC holds holds the position that time, that is if both are falling and market is totally green that time, suddenly what happened, I don't know what happened to the news or like any kind of membership or something they are doing, HDFC Bank and Reliance both are falling like anything. In that case, though market was totally green by that time, you can see a fall in the market. So that is what the importance of weightage. That too, high weighted stocks, heavy weighted stocks are very importantly to be known. And in case if you are taking a stock on the list, top of the list, then always be careful with the market trend. And also, if you are preferring index tradings, okay, you are preferring index trading, looking at high weighted stocks also good. Checking what is happening in HDFC, checking what is happening in Reliance. I'm taking Nifty index trading only. I'm planning for an index trading. Still checking what is happening with this stock will give you a precaution. Okay, so this much effective weightages. That is what actually mentioned here. You can start referring to this also. I'll go to the notes now. It is available. Yes, Miss Bhavni, it is available. Okay, let me come to this again because every year we have to keep checking it. Okay. Okay, so this is the old list. I showed you the new one as well. Okay, so Nifty correlation. I'll tell you what is this. Just once in a time, at least the sector will be coming in a correlation. For that only it is mentioned. You can see 1, 1, 1, 1 here. So how the different sector will move in relation. So once in a while, auto and Nifty, Bank Nifty and Nifty, Energy and Nifty. So like that it is been updated. Just a average, 5 years monthly average it is. Okay, global market relations. Very, very, very important to just understand what is the opening move of the market. Okay, opening. That is, I'm holding my position. I'm totally like I'm going mad now. I wanted to know what is going to happen before the market starts. You can understand or you will get an idea what's going to happen in the opening hours. Okay, before even in the pre-market, what's going to happen also you can understand. And always remember, this is a universe. We are living in a world, like not only in India, in a world where many global markets are there. Out of our India, like country, many global markets are there. So if any issues are happening out of our country also may reflect, may affect our market. For that reason only, global market also we are analyzing. Okay, so even if you see COVID, that shook all over the world, right? So even that affected the market by that time. And also world war, I mean the war which happened in between Ukraine wars and all, so these things also affected. So like that, if any global crisis is happening, that may affect our market also. So always understanding what's happening globally also important factor. So let's see how to understand it and where to find the global market. I'll show you. I'll tell you two ways. Okay, one is money control, like you can check like global market money control. You can see it here. US markets, European markets, Asian markets available. Okay, this is under money control, global market. Or if you want to check in investing.com also you can check. Okay, here also you will get the data. I'll show you where to check. Just a minute. I don't know why it is changing every time. Okay, you can see major indices available here. Okay, which is open, which is closed. Red one is closed. Our market is closed now. So red one is closed and green ones are open. You can see what are the markets open now. Okay, and also in this also you can refer the same. Oh my god, I don't know why these many ads. Okay, so here also you can see whichever market is open. Dow Jones open, as you know, US markets always will be in the evening time. So it is running now, and you can see which and all closed. Okay, so these are the two ways where you can refer global market. I'll tell you what is the major significance. That is why I should check global market. Remember one thing very simply. Okay, when you are in the market, okay, you are live in the market, just refer to the color. Basically, visualize the color of this particular page. All are mostly green in color. All are mostly red in color. So this also will give you an idea what's happening overall. Now you can see Dow Jones is totally green, 145 points green. But what happened to our market today? It was totally red, right? So how this is going to affect our market and how our market is going to show this up tomorrow, we will see that correlation. See, this is you have to just imagine this. This is just an example. Okay, this is just an example. Just to assume that what is going to happen, and you can understand how to understand. I mean, how to analyze it in the live market. So, firstly, Indian market. For an example, Indian market opens at 9:15 a.m. morning. It is opening with 50 points positive. 50 points positive market is opening, and where I'm just analyzing that market being at 50 points positive, it may give 75 to 100 points because it's totally positive. So I'm expecting that market will give a rally at least of 75 to 100 points. And 11 to 12 or 1:30 noon, see, have you experienced this? First off, second off a market may differ sometimes. First off will be green, second off will be opposite to it. First off will be red, second off opposite to it. And in some cases, first off will be green, second off will be dark green. That is, it is beautifully green, like it is going high and high. Sometimes first off will be red, second off will be bleeding like anything. So, what is the reason that after that is after the lunchtime or 12 o'clock or 1:30, why there is a Okay, sorry for the disturbance. Okay, so why this change is happening? Mainly because of one market called European market. Okay, so it opens at the noon time, that is the afternoon time. In case if European market is also positive, I'm already positive 50 points. I'm expecting market will go 75 to 100 points. As the European market opens and it is also positive, like as it is opening, it is also positive. My market is boosted up now because it is affecting reflecting on my market also, and I thought it will give 75 to 100 points. Now because of my European market opening positive, my market went 150 to 100 points. This is possible. Okay, if European market, because it happens, it affects our market also as it is opening. So if European market opens negative and my market was positive, it might have not given you that much fall, but there will be a reflection, that is like from 75 to 100 it may come down 50, 20, 30, or sometimes negative. So if it is along with with my market direction, then I am double than it. In case if it is opposite to my market direction, either it will totally change my direction now in the second off, or it will affect my green momentum. It will make me somewhat consolidated. Okay, and then Indian market close time is 3:30. We are closing up. Because of European market, I got 150 points because totally today market was positive because of European markets opening also. Fine, done. My market is closed now. Singapore Nifty. Okay, now it is rebranded as Gift Nifty. Okay, before it was SGX Nifty, and now even now it is available, but it is rebranded as Gift Nifty. That I'll show you. See here, Gift Nifty. You can see here. So this is what Gift Nifty. It was actually SGX Nifty, but it is rebranded now. So Gift Nifty, which is on now. So this is what updated here. Okay, so Singapore GIFT Nifty is opening and it is also continuing because GIFT Nifty will open in the morning 6:30 and it will actually close at mid, that is like around 3:40 or something. It will close and again it will open. It has two sessions. One is 6:30 a.m. to 3:40 p.m. and another one is 4:35 p.m. to 2:45 p.m. Okay, so that is also one thing which is happening in Gift Nifty. So two market sessions will be available. So if it is open now, even that is open now only. So positive 11 points positive it is running. Okay, it is active and it is running 11 points positive. From my market opening also it was there. Even now it is live and it is 11 points positive. US market will open at the evening time. Even now market is open, Dow Jones. And even US market is positive. Everything is like rushing positive and everything went positive. Even Singapore Nifty or Gift Nifty, it 7,500 points it went and it closed positive. Because US market is not going to affect us directly. I'm not going to be affected because I'm not open at that time. Indian market is not open when US market is open. But who is getting affected? SGX Nifty or Gift Nifty. So Gift Nifty is affected by US market and Gift Nifty is affecting our market directly because Gift Nifty and our Nifty has a directly proportional thing. Okay, so next day morning, if Gift Nifty is opening positive, you can see the same reflection happening in our market also. Before it was too much. Before you can see, like if Gift Nifty is 50 points positive, our Nifty will be 55, 60 points positive. That much close it was. But nowadays it's not that much, but still it has that reflection. Okay, so if Gift Nifty is positive, maximum you can see our Nifty opening positive. If Gift Nifty is opening 40, 50 points positive, our market can give a gap up or it can give a beautiful dark green in the opening itself. Okay, so this is what the relationship between global market, but these things alone if you are referring to, which is enough. Indian market, which market is affecting us? European market at the noon. And Gift Nifty is obviously affecting us. You can refer at any time. And after our market closes, Dow Jones is going to affect Gift Nifty. And as it closes, next day with respect to that, Gift Nifty is going to open, which is going to affect our market directly. So in case US market is shedding blood like anything, then Singapore Nifty or Gift Nifty is also red. Next day, SGX Nifty is opening red. Our market may also get reflected accordingly. Okay, so this is what the correlation. And in case if you want to refer, you can. But remember that with one parameter, we can never judge the market. With one parameter in the sense, with just a global market, we cannot get an analysis that yes, on a conviction, this is only going to happen. No, anything may happen in between. So this is also one of the way which will give you an idea. Okay, so refer this, but don't be very sure, very conviction on this note, but have 90% an idea. Okay, 90% market will be green. 10% if it is reversing, I have to be cautious on that and I have to take another plan. Plan A, plan B, I should have every day. So if plan A is not working, like on highest probability, I should go for the next one. Either I have to give up for the day or I have to just go with the plan B. So it's always recommended to have plan B. That is, if I am analyzing market will be going green, but market is suddenly falling, suddenly jump to plan B. That is, according to the technicals, reverse your position. Okay, so this is how we need to analyze with the global market. Now also I'll tell you one thing here. You can see here, totally Gift Nifty was also red because our market was red, right? Now, because of Dow Jones being totally green, you can see GIFT Nifty is also green now. If it is ending green today and if it is opening green tomorrow, see that same in our Nifty's opening. So I want everyone to refer this tomorrow morning and just get an idea. Okay. And European market, you can see here. So this will open at noon time, which will be affecting us. Okay. So I think there is no confusion in this. Um, Operator games. Market correction means the fall, Mr. Mahesh. Today also there was a big fall, right? That if it is totally, if that P ratio, yeah, we are going to learn that, right? So in P ratio also we will learn about this correction. I'll give an idea on that, okay? See, operator games are there, but it is not that easy in NSE and FNO stocks. If these kind of operator games are happening, SEBI will totally pack them out. The stocks which is in Nifty 50 also, if you see, or FNO also, few stocks will be added, few stocks will be removed. These things and all will happen because of SEBI only. They will always keep an eye on these things. If anything, operator games are happening, malpractice is happening there, they will maximum find it out and they will remove from the game. But still, few are still happening. But if it is happening to that extent, operator games are happening to a high extent, obviously we are not going to be in the market. So that is not happening to a very big extent. That's the reason we are trusting it and we are making our technicals properly. Okay. So for that only SEBI is there. So more on global indices. I think Mr. Shrikant, are you clear now? I gave you a summary also. Are you clear or should I give you another update? Because seeing the recordings, you will get irritated. Why this lady is telling me again and again the same thing? That's the reason I'm not repeating things in the video. Because on watching the recording video, you will surely scold me like anything. NASDAQ also, yes, that will also affect us. That is also directly going, not directly. So it is like open now. So maybe it is going to affect the other market, that is maybe Asian markets, and from Asian market we are going to be directly affected. In Asian market also we are not going to refer everything, just GIFT Nifty. And European market you can just refer on a whole, and US market, NASDAQ and Dow Jones, both we will be referring to. Okay. Yes, I think. Okay, it's 8. So let's have a break and come back because almost it is done. I have done with this and we are going for the next one. That is, yeah, P ratio. Completing this IPO, I will take you to the P ratio part. So take 5 minutes break and you can come back. Oh, okay. Right, Mr. Mahesh. Let us discuss in the other thing, that is maybe clarification or individually also. S&P 500 also we cannot directly deal with it, right, Mr. Jaideep? Like it is also just for the US market reference. See, all the US market reference are not going to directly affect us. They are just going to affect other market, Asian market, which is open currently, and that is going to affect. So it's like indirect source of reflection. That's it. Nothing apart from that. And we cannot trade with that also, obviously. So it's just affecting us indirectly. That's it. But you can refer. Even in European market, we are referring on a whole, right? The same way. Not today, Mr. Anshul. Possibly like going forward, we can discuss more about other stuffs as well. And especially Master Saddam will give you an idea on all these stuffs. Okay. Let me finish this because maximum I'll try to complete it today. And from tomorrow, your other classes you can take. Let's not waste time because I thought of taking 3 classes yesterday, today, and tomorrow. But maximum I'll try to wind up today itself so that you have good time for your other technicals. Okay. So let's see. We are going to discuss more. Okay. In clarification sessions and all, because like Master Saddam is not well. We didn't start with the clarification. But maximum as we started this week, we are going to discuss more about it. Okay. So take a break and come back. what is the time now? 8:02, right? So 8:07. Please be back. We are going to discuss something in detail. Okay? Yeah. Welcome back. Yes, IPO. Yeah, we are going to discuss about that IPO, Mr. Anshul. Okay, so let's see. Okay, so primary market and secondary market. This we discussed yesterday itself. Primary market, as I told you, that is the place where securities are created, and secondary market is the place where those securities are traded. We are trading, getting the list from the secondary market, that is stock exchange, right? And primary market, we are not going to deal directly with it, but just in a one case, IPO. So if we are going to buy something on IPO, if it is allotted, then I'm going to deal with the primary market. Okay. IPO, as I told you yesterday, initial public offer. If a company wants to list themselves in the secondary market, then they have to first release their like shares to the public, general public. That is called IPO. After getting listed in IPO only, they will be coming to the secondary market, which is in the stock exchange. In case allotment is not given to you, don't worry. Maybe on a low price, you might have got the allotment, but the price will be a bit higher when it comes to the secondary market. Doesn't matter. IPO, if allotment is not given, you can take the same in the secondary market as it is listed. Because anyways, that stock is going to be listed in our secondary market. So that time we can take, if allotment is given, enjoy with it. But I'll tell you what you have to do with that allotment also. And IPO, what is a stock share? Okay. Let me go with IPO. The company should be a public limited. There are few eligibility criteria. I cannot directly come and be listed, or I cannot directly issue the IPO because there are few eligibility criteria. And why especially they are releasing IPO? Main reason is, see, if I want some money, I have to go for a bank and I have to get money. Interest will be there. So many headaches are there. I have to bear it anyways. But if you are really eligible to be giving your shares to the general public, giving an IPO, you can easily make money. That is raising fund. In other words, for raising fund, they will initially offer their shares to the general public. They will collect fund and they will use for their business. Okay, for that only they need some eligibility criteria. So it is not just like giving their shares alone. They are making money out of it and they are going to deal with their business. Maybe why they are raising fund means there are many reasons for it, like maybe extending their business and building some branches in other countries. Okay, maybe I'm doing any other business, like maybe another source he is arranging, so something like that he will be doing with his company. For that, if he needs money, instead of going to a bank and taking a loan, he will give his maybe 10% share or 20% share to the general public, where he can raise money. Okay, so this is the basic reason. But what are the eligibility criteria for that? Means company should be a public limited company, and not only that, revenue matters. A company cannot list themselves like that. Revenue matters, and their annual revenue should not be less than 10 crores. Annual revenue every year, it should not be less than 10 crores. And also growth should be there, right? If not, if growth is not there in a company, how we can trust them, right? And also the field. where they are having their business, what is the field now, whether any scope is there for the field, everything matters. And at least their growth should be 20 percentage than the previous year. So annual growth should be 20 percentage at least, I'm telling, on a minimum rate. So all these things will be checked by the SEBI, and then only they will be releasing the IPO. And also they have to give file something, they have to give do a documentation process, okay, to the SEBI, where they have to mention everything, like what kind of business they are doing, what opportunities they have in the future, and also what about in case if they are raising fund for repaying the full debt or only the partial payment they have to do, they are going to do with this fundraising. All these things will be answered in the documentation, and we have an idea. That is you can ask me, if I want to purchase an IPO, the stock, what can I do? Technically, you cannot do anything because it is just a new stock where I cannot do technical analysis. Only fundamental analysis possible. Understanding what kind of business it is and the particular, you remember Paytm, what happened to it. So what kind of field or like business model it is, and in future whether there is a scope or not. Okay, and it is a famous company or any issues there with it. So all these things we have to see on a very normal range. If you want to see it in a detailed range, then you have one option, going to the SEBI. In case if anyone have seen this already, then you may be knowing the route where to find it. Go to SEBI website, but this requires, seriously, this requires your patience. Public issues, you can see draft offer documents filled. Drafting means, you know, right, it is not like legally approved, it is just a draft, that's it. Red herring documents, click on it. You can see many stocks here. So which one you need to select, you have to click on that particular one. You will get the documentation which they have filled with SEBI. General risk, risk in relation to the first offer, companies and promoters selling shareholders, absolute responsibility. So everything is mentioned. You need time. You need to give time. You have to hold your patience. So as you refer it, you will get an idea. If it is not clear, if it is not clear why they are raising fund and what is the issue, then better ignore that particular IPO. And where to find out what all IPOs available means, sorry, bids. So you can just come here, IPO, you can click on IPO. Under bids, it's available. Under IPO, you can see all these things. You can see PVSL is the one which is recently came like 12th March. That is yesterday it started. Till 14th March, you have time to raise for it. And one more thing, as I told you, IPO is not for everyone. Allotment is only given for few, but you have to pay the capital. 14,000 is the capital for 50 quantity. 14,000 you have to give for 50 quantity, and then only you can apply. And what will happen is, see, offer start date, offer end date, 14th. Allotment will be done on 15th. And refund initiation. In case of allotment is done, your capital is utilized. If your allotment is not done, your refund will be initiated. It will be back to your account. And on 18th, demat transfer will happen. And on 19th, listings. That is, after that, we can see that in the secondary market, we can start trading with the stock. PVSL will be listed in the secondary market where we can take our trade. And this range you may not get. That is the only difference. 280 to 295 is there, right? But maybe after getting listed, the price may go higher. That is the only difference. Apart from that, you can. But remember that as an individual, for one lot, 14,000 approx we can give for one lot. Don't give too much. One lot, 14,000 to 15,000. This is a good quantity, good capital. You can give 1,36,000 and all not required. But like you have to give 14,000 to 15,000 for this IPO. And if it is an institution, like he is going to purchase many things in the sense, they can take up to 10 lakhs also. That is up to them. Like large institutions and all will take huge IPOs, like spending lakhs and lakhs, 10 lakhs and all, they will invest here. But as an individual, we can just invest 14,000, 15,000 per lot for IPO. Okay, don't invest too much. And also, I'm looking for a trading. I am just going to buy PVSL today, and next week, as it goes up, as it gives 2%, I'm going to exit. Please don't do this. Please don't take the allotment. Give it for someone else. They can make you utilize it properly, because IPOs are for investments, not for trading. IPOs are for investments. That is, if you are taking PVSL for a longer time, if you are having it in your portfolio, that is the one thing like which will help you to make some good returns, because it's a new stock. It's a new stock, so it has a very good future, right? So it will obviously give its momentum. After 2-3 years, if you're seeing this particular investment, you might have got some money. But if you want to exit within a short period, 3 days, 5 days, 1 month, 2 months, better don't take it from IPO. Don't break your heads there. Let it come to the secondary market, then you take it. Then you take for intraday or STBT or swing or delivery of 1-2 months. It's up to you. But if you are taking IPO, at least keep for 2 to 3 years as an investment, where you can make good money and you can utilize the IPO properly. Okay, so this is one thing I thought of telling. If anyone is planning for IPO, please don't plan if you are looking for a short-term delivery. Okay, so this is what basic, very important thing on IPO as of now. Okay, for the price range listed or increased price on the opening. The maximum, the amount which is given here will be charged, or up and down, because price range is there, right? So up or up and down. Anyways, on initial time, how much you are giving to that IPO, that within that only your allotment will be given. Don't worry. Okay, done. And coming to the next part, IFP was also there. Looking for still good time. Yeah, Mr. Mahesh is right. But thing is, like, if it is an investment, then it's really good. You can because you're breaking head to get allotment. In that case, if you are getting some good returns out of it, it's truly good. If not, if you want a short-term gain, then I think no need to take that much tension, right? I think you're getting my point. So let's be free with our trade as it comes to the secondary market. Let me take from that. That's it. That's my opinion, obviously. Okay. I have never broken my head. I have taken in 5 times, I think once I got my allotment. We can sell on the same day. Opening price is higher than, in case if the stock price is increasing, like, yes, you can go for your exit. See, it's totally in our hand. Okay. I'm giving you some suggestion so that you will be utilizing it properly. But as it goes up, you can exit. Doesn't matter. No, Mr. Ramu, like not like that. Small, medium enterprises you are telling, right? No, not like that. Even that is going to have a kind of capital gain. Maybe after, even in that, if you are taking any SMA also, give some investment, a long-term investment, you will be getting gain out of it. Okay. Maybe if it is a blue chip company, then obviously a large cap, then obviously the profit will be good in a short period. But if it is an SME, maybe it may take some time. But on an investment, you will get good capital, good gain. Okay. The company should be, let's come back to IPO. Company should be SME, small, medium enterprises, or large cap. Acquiring public funds instead of taking loan. I told you already. For example, the company worth is 1 lakh, for an example. No company worth 1 lakh and they will be releasing IPO. And they need 10,000 for expansion. 10% shares will be sold to the public as IPO because they need 10,000. Okay. So this is what initial public offer. And 5 to 10 days from issuance, IPO issuance, allotment period will be there. And after the allotment, the stock will be listed in the secondary market and we can trade without any tension. Okay. And even after 1 or 2 months, technical history will also be there. So even those stocks can be traded technically. Okay. But if you want to initiate it as IPO, technicals are not at all responsible for it. Only fundamentals. you can refer. Okay, this is something which is not that much easy. This is something which is not that much easy at all. Just a minute. FPO, I'm coming to that. So FPO, as I told you, like it is not that easy to come every time. Frequently, IPOs are getting released, but FPOs are not that easily happening. Once in a while, even Adani also gave recent days, and before that, S Bank. So these are some well-known stocks which gave on FPO. FPO is nothing but they have released IPO. They acquired fund, but that is not enough for them. And also, their stock is not having a good volume. They are not shown off. That is, the stock, if you have forgotten it, volume is too low. So to just show them off, these FPOs will be released. Because if you see the stock name in your demat account running there, FPO, Adani Enterprises is there, then everyone will be looking at it, and automatically the volume may increase, because FPO also may give on a cheaper rate. If 230 is the normal price, means even 220 or 225 or below that also FPO will be released. So thinking that we will take FPO where the volume will be automatically increasing, they will be showing off their stock like anything. So for that, FPO can be released either for acquiring fund again or for showing off the stock again to the public to raise volume. So, a follow-on public offering or FPO is the issuance of shares to investors by a company listed on a stock exchange. A follow-on offering is an issuance of additional shares made by a company after an initial public offering. After IPO, that is, the stock which is already listed in the stock exchange, they still want to acquire fund or they still want to raise their volume, they will be leaving this FPO with a low cost. FPO is a follow-up to the IPO, as the name suggests. A follow-on public offer is the issuance of shares after the company is listed on a stock exchange. In other words, FPO is an additional issue, whereas IPO is an initial issue. Okay. How FPO is calculated? The issue price for an FPO is mostly, I told you, like mostly lower than the prevailing market price. So whatever the current market price is, below that maximum they will release. It doesn't mean that they will always release with that. Sometimes it will be above the current market price also. Sometimes it will be below it. Maximum, majority it will be below. This is done by the company to get more and more subscribers to its issue. Lower demand for the listed shares eventually brings down the market price and levels it with the FPO issue price. Okay, so I think Mr. Anshul has a doubt. Okay, rights issue. Which one you're asking, Mr. Anshul? Like, okay, and difference between FPO and yeah, that is there. That will be updated while they are revealing the FPO, right? Obviously, as I told you, just checking in the SEBI also, you will get an idea. And also, whenever they're releasing maybe FPO or IPO, whatever they are bringing it with, the right issue, everything will be updated generally by them. Even recently, when Adani also released, they have brought that into picture. So you'll be anyways getting an update on it. Okay. Okay, yeah. So we will discuss more about it, okay? But not now because I'm thinking to close it with P ratio. P ratio seems to be a very vast topic, but it's very easy to understand and also very effective. When you are planning to invest, it's very, very important where we can go for it. Right, Mr. Prakash, no worries. See, it's a question like he's specifically asking. That's the reason, not into this particularly. That's the reason I asked, like just like that. Okay, no problem. I'll answer. I'll just read the question and then go with that answer accordingly. Okay, no problem. Okay. So he was actually asking about rights issue. Okay, FPO and its rights issue he was asking. Nothing else. So P ratio. P ratio is simply like price to earning ratio. So why we are going with the P ratio analysis means, see, if you are purchasing something, okay, you are buying any electronic goods. If you know the right price of that particular goods, and if someone is telling you or someone is cheating you that I am giving at a discounted rate, okay, a mobile phone, something they are selling it off, you know the right value, actual price of it, you know, but the particular maybe Flipkart, Amazon, many are releasing their offer prices, right? So discounted rate, they, you know, already the actual price is 70,000, but they are telling, right, I'm giving a discount and now the price is 72,000. Knowing that the actual price is 70,000, I will not purchase it costing at 72,000, right? I'm not ready to lose my 2,000 there. And also they said it is given at discounted price. Why should I purchase at the actual price also if they are giving at 70,000? So right. So if I know what is the actual price, I can understand whether he is giving me at a discounted price or at a high price. In case the same mobile, if he is giving for me for 65,000, I know the actual price is 70 and I'm getting it at 65. Yes, I will go for it because 5,000 profit I'm gaining from that, right? So this is what actually price to earning ratio. That is knowing the fair value, fair price of the stock, whether I'm purchasing it at a fair price or overrated price or at a discounted price. Okay, this is what price to earning ratio. Okay, so price to earnings ratio or simply PE ratio is one of the most widely used ratio by the investors. I'm telling again, this is for investment. Nifty and all those related things are for traders. And now I'm entering a topic which is helpful for investment. Okay, investors to, and don't ask me whether I can check P ratio for trading. P ratio is high or low to this stock, but I am planning for a trading tomorrow, whether I can go for it or not. I'm telling the answer now itself. P ratio is not for trading. You take any stock tomorrow, day after tomorrow, doesn't matter. But if you're planning for an investment, P ratio, you have to check. Investors to find out the stock's fair value. The value is identified by comparing the market price of the stocks with its earnings, because every stock, every share is being given. It's not just for playing, it's for getting money. So for every move, there is some earnings happening. The company is earning something. So that is what this ratio, price to earning ratio, whether we are giving the fair value to every earnings or not. When you buy a stock, you earn the right to a company's future earnings and profits. But how do you know if you're buying a stock at a discount or premium? Premium in a sense, highest rate or discounted rate. This is where P ratio comes to the rescue. P ratio tells you whether you're buying the stock at its fair value or not. P ratio is the price an investor is willing to pay. So I am ready to give the company this amount. Let him earn. Let him earn the amount, because for that only he is having a stock in the stock exchange. I'm ready to give, because that is the reason we are also giving capital. I'm ready to give him some kind of earnings, but I should know whether I am paying rightly or he is charging high. Okay, so I'm paying over like overrated prices I'm taking or underrated. There is no set range for P ratio. Important point to be noted. There is no set range. There is no perfect range of P ratio. But we can have an average. Okay, I'll tell you that average. 20 to 25 is an average range. Okay, below 20, especially 16 and below, are a perfect time for buy, perfect time for investments. If it is greater than 25, 30 and all, if it is more than that, it's not at all a time for buying. Maybe if you are looking for a shorting, you can do, but not the right time for investment. This is an average value, but I'll tell you what all the levels available and all. Less than 20 P ratio, 16 and all, perfect time for investment. Greater than 25, 30 plus and all, better don't do any investment at that time. If you are holding anything also, plan to liquidate, because that is a time for short. Okay, so this is what actually P ratio. I'll tell you even more in detail. Shall be compared with some sector. No. Individual stock can be taken, Mr. Anshul. Just individual stock P ratio is enough. Sectoral one is not required. Okay, that is not required. Individual will be even more effective. We can prefer that, especially. As a rule of thumb, undervalued stocks have low P ratio. So if a stock is undervalued, it has a low P ratio, whereas a high P ratio stock means the stock is overvalued. It is to some extent like which is not actually a fair price. Value investors like Warren Buffett, you know who he is, advise investing in low PE stocks as these stocks have high growth potential and are available cheaply in the market. Anyways, we are getting at a low price, and obviously it has a high growth potential. We may see because P ratios to the low, as it is increasing, obviously the price as it goes up on an investment range at least of 2 to 3 years, we will be getting a good returns where we have purchased at a low rate as well. Okay, this is what a P ratio. Okay, P ratio. The formula of P ratio is share price. Okay, I didn't read the question of Mr. Anshul. Okay, yeah. So actually, he asked me whether P ratio shall be compared with sector or overall. Okay, I thought of telling it maybe after completing, but as you have asked me to read it, I have read it. So I answered for that question only. So sector wise P ratio is not that much required. Individual P ratio can be verified. Paper stocks always have low. Yeah, Mr. Tangaraj, you got my point. It's good for investment, but not that much low. If the stock has normally negative P ratio stocks are also there. See, I'm mentioning it now itself. Negative P ratio stocks doesn't mean that it is totally good, almost down, so I can make. No, earnings are going negative. That's the reason the P ratio went negative. So please don't take any stock for investment where the P ratio is negative. Okay, earnings are negative there, which is not good for us to enter. Okay, and if it is 2, 3, 16 and below, then it's good. Individual, every stock has its individual P ratio. I'll tell you where to fetch it out. Okay. Screen is not visible, but I think it's there. Everyone can see my screen. Any issue? Mr. Mahesh is actually facing an issue. Is my screen visible? Yeah, Mr. Mahesh, it's visible to others. Yeah, maybe he is facing some issue. Please check it from your end, Mr. Mahesh. Okay, done. So this is what a P ratio. And as I told you, as it is down. And one more thing, I told you right, price to earnings ratio. You can ask me, what is the price? What is earnings? Price is nothing else like you can see here. BPCL, what is the current market price? 599.35. This is price. It keeps changing. But earnings will not keep changing just like that on every quarterly basis. Quarterly results will be announced, right? So every quarterly basis only earnings will be updated. Okay. So every 3 months if you are checking also fine, or minute changes if you want to check also every day you can, because the price movement will be affecting as well, but not to that extent. But earnings change in the earnings may affect the P ratio badly, which will get updated every 3 months. Okay, so this is what price to earnings ratio. I'll tell you the formula as well. Okay, let's see the formula now. Share price by earnings per share. For an example, if P ratio of a company is 25, it means that investors are willing, that means we are willing to pay 25 rupees for every 1 rupee the company earns. Remember this, what we are doing. For every 1 rupee the company is earning, we are giving 25 rupees, whether it is fair or not. Similarly, if Nifty P ratio is 23, Nifty P ratio, it means investors are willing to pay 23 rupees for 1 rupee profit collectively earned by all the companies, that because Nifty P ratio means average of all Nifty 50 stocks. So collectively earned by all the companies that are included in Nifty. So for every 1 rupee profit the company is earning, we are giving the P ratio, the amount 23 rupees, 25 rupees, 18 rupees. So 2 rupees, 3 rupees, 5 rupees, 16 rupees are fine. 20 rupees, 30 rupees, 40 rupees are not fair value. Okay. So we are going to see where we can refer these kind of P ratio. Come to investing.com. Okay. Check for any stock. Come down. Can you see P ratio? SBIN is actually good. Very good because 10.4 only. So for investment, if you are planning for SBIN, actually it's a good stock because P ratio is just 10.4. So this is where you can find out a stock's P ratio. Under investing.com, search for the stock name and NSE or BSE. Refer it. Click on it. Come down. P ratio. Even Tata Chemical only I searched, right? So Tata Chemical is also good. Tata Chemical is also good. Okay, let's not go with this. I'll show you where to check with this financial. But here, this is the P ratio. In case if the P ratio is not updated, you can see a hyphen there. Then it is yet to be calculated. You can check tomorrow or day after tomorrow. Okay, but maximum for most of the stocks, like you can check your P ratio here. In case if it is not available, wait for 1 day or 2. You will be getting it updated. EPS, earnings per share. You can see earnings per share here, 71.71. But that is not required. Just referring to P ratio is also enough. Okay, so this is where you are going to Tech Mahindra. Okay, let me check it. Tech Mahindra share price. Okay. Okay, this is not at all recommended for investment. But you can ask me, I am planning for trading tomorrow. You are telling me it's not recommended. I am telling no for investment, but yes for intraday. Intraday or trading, no problem for a short term. But for a long term, if you are looking, this is not a right stock. Okay, that means you are not getting it at a cheap rate. You are giving a high rate for purchasing this stock. If you are okay, then no problem for me. Okay, this is my suggestion that let's not give a high rate for the stock which is not worthy. And also no need to give that much to the company, right? So fair price is enough for me to give. This is a high rate. If you are purchasing this stock for investment, you are giving too much to the company more than the fair value. I told you, right, Mr. Ashish. Okay. Mr. Ashish is asking what should be the buying range of P ratio. Below 20 is good and above 20 like 22, 23, 25 and 30, 35 and all not at all recommended. Okay, not for investment, but yes for trading. Maybe according to technicals, if you are trading, no problem. This is purely for investment. Okay, done. So let's see about Nifty P ratio now. So this is where you can check normal P ratio of a stock. Okay, and coming to the Nifty P ratio. See, this is one common example I will give for a catchy point. You remember you are a cricketer. Okay, assume that you are a cricketer. You are very good. You have your set of members all ready for it, and you are perfectly talented. Maybe a wicket keeper, our batsman is ready, bowler, fielders, everyone are ready. Okay, but that is a rainy day, and the field is not ready. We cannot do anything, right? With talented cricketers, though they are very talented, I cannot do anything with that kind of field. The playground should be perfect for it. Without that, no, I cannot do anything. This is what Nifty. Though the cricketers are good, if the playground is not good, I'm not going to play because I know it will not be a good play, right? I cannot be sure I will be winning the game, obviously. So the same way, if Nifty is not good, if Nifty is not proper, perfect for investment, then it's not, if even though if you have taken a P ratio of 2 rupee, 3 rupee also, better give some time. Okay, better give some time and then do your investments accordingly. Okay, so that is what Nifty P ratio. I'll tell you what is the right time to go with it. Generally search for niftypratio.com. You will get it. I'll be referring to this only. So go to Nifty P ratio. You can see every month, every year's P ratio here. Okay, so the time where and all you can see a high P ratio range. There after that you can see the green one. Mr. Mahesh asked me, right, what is a correction? Correction is nothing but a fall. If the P ratio is to the high, this is the reason why we are not supposed to take P ratio, or why we are not supposed to do an investment if Nifty is to the high. If Nifty is 40 points, 35 points means there maximum we can expect a correction. Correction is nothing but a fall. If fall is happening, what will happen to your stock? Majority of the stock which is coming under Nifty will give its fall. That is the reason, like in case if you are planning for an investment, let's not incur immediate loss. Let's do. You remember in the COVID time where there was a huge loss, but after that, as it gives a reversal, who and all have newly taken a mutual fund at that time, who and all invested freshly at that time, made double the money, double the money easily. Mutual funds, I don't know how many invested in 2020. So that time, after COVID, after a fall, the stock, many stocks gave a rally, even Nifty gave a rally, and many doubled their money. First time they might have invested, but they might have taken a good money. That is because they invested at the right time. Even if you have noted, I'm not sure how many have noted this, during Diwali time, nearing Diwali, maximum we can expect a fall. We don't know from where the fall is happening. After Diwali, you can see a beautiful rally. Recently, have you noted highs and all, high breakouts and all? After Diwali, maximum we can see that kind of like high breakouts and new highs and something like that. So this is also something which happens, like history is always repeated. So the same way, if we know what is the right time of investment, then at that time, if I am newly investing also, within a very short time, I can make my money. No need to wait for 10 years. For the money you're going to get within 10 years, if you're rightly investing, you can make it within 1 or 2 years. That is what Nifty P ratio, understanding Nifty P ratio. Okay, so now almost you can see, let me take the higher one. You can see the fall is happening after reaching the high, right? You can see the P ratio now. See, in the month of Jan, it was 22.9. Next month, somewhat it gave a fall, somewhat it reduced. And now, because of the highs and all, reaching new highs, now the P ratio increased. And again, after the fall, if you check the P ratio next month, maybe if the fall is continuing, very good, correction is happening, then this 23 may get reduced. Okay, so this is what P ratio. If the P ratio is getting increased, correction will happen, and correction means a fall. After giving a fall, it will correct the P ratio, which will reduce the P ratio. So if it comes below 20 and all, perfect time for investment. Never wait for someone to tell you something. Get some good stocks with low P ratio, start investing. But with this recent scenario, we didn't get that much actually. But you can see at this time, last year, April and all, somewhat it gave a fall. At that time, in case